Palantir has a market cap of $56 billion, and their shares are trading at $25.22 today, and they are up over 52% year to date. And taking a look at ARM Holdings, they have a market cap of $170 billion and are trading at $166.94, who are also up a lot this year, seeing a massive 142% increase over that time. Zooming out on the charts, we can see that both of these stocks show the AI hype really getting behind them around the mid-2023 mark and just absolutely taking off from there. For my December 2026 price projection, Palantir's EPS is expected to be 28 cents, and given their current PE is 200, I'm going to use 90 for this calculation because it's much more realistic and probably still too high to be honest, but that would give us a stock price of 25 a share, which is exactly where it trades today. For ARM, their 2026 earnings per share is expected to be around $1.50, and even though their price to earnings is $5.67, I'm going to use 90 for this calculation as well, and 90 times their EPS of $1.05 gives us $135, and that is a 19% downside. As for the one-year price forecasts, it looks like analysts are expecting Palantir to be trading at $22.55, which is an 11% downside, and for ARM, they're expecting a price of $130.76, which is a 21% downside. Onto their earnings, Palantir has beat 3 of their last 4 earnings calls, while ARM has beat all 3 of theirs, and neither of them offer a dividend. As for the debt situation, Palantir has a shareholder equity of $3.9 billion and a total debt of 0.21, which gives them 86% debt to equity, and it looks like they have a free cash flow of $0.7 billion, which is plenty. For ARM, pretty similar story. They have a shareholder equity of $5.3 billion, a total debt of 0.22, and that makes their debt to equity pretty low as well at around 4%, and they do also have tons of free cash flow at $1 billion. In terms of revenue, Palantir's revenue and net income have been growing very nicely over time, and same thing for ARM, although their net income has been a bit more sporadic lately. Overall, while both of these stocks have great revenue and net income growth, low debt obligations, and great free cash flow, what really concerns me is those valuations. I mean, for Palantir, a PE over 200 is just not sustainable, and at its current valuation and price point, there is more than 5 years of 24% year-over-year growth built in. Their earnings would have to surpass 50 cents a share at this price point in order for them to have a PE of 50, and that's just not happening until 2029 at that 24% growth rate. And it's the same story for ARM. Their earnings have actually been falling in the short term, so I have no idea how their PE got to over 500, but here we are. And at these levels, assuming a 30% year-over-year growth rate, ARM wouldn't come close to a reasonable valuation until 2037, and that means this stock has 13 years of 30% year-over-year growth built in, which is just absolutely absurd. So for those reasons, I don't think you should be buying either of these stocks, and as a result, I have to rate Palantir a sell and ARM a strong sell. They have just run up into oblivion and have way too much future growth built into the current price point to justify. So that's all I have for you today on Palantir and ARM. Please drop a like, let me know what stocks you want me to cover next, and I will see you next video.